Good morning. It is still Monday, August 4th. We're about 2 hours deep into the markets. As I mentioned last Friday, I'm going to be out of town a good part of this week, and so I won't be able to follow through with things as I would like. So I should be able to make a recording today and tomorrow, but I'm not sure about Wednesday, Thursday, Friday. So this time I may leave you hanging. We'll see. Let's look back at a long call versus a calendar spread. Again, we did this a couple of weeks ago. Now, it begins with our forecast. Okay, so as I was looking over my watch list, the first one that I thought might be a possible setup was ALB. Let me zoom in here a little bit. Okay, so a little bit of an upward trend, a recent pullback to what potentially could be support. My mouse is having a hard time catching up with us. And as we look down here at our stochastic and our MACD, we're early on both of them again, but both of them are flirting, pretending, thinking about coming back up. So next, how far might we go? Well, that's not too unreasonable to think that we could go all the way to our recent highs. And that would put us at a level of about, let's call it 83. All right. So we have a forecast of our potential move. Let's start with our long call. Now, at some point, we'll do a presentation where we talk about different time frames and different strike prices that you could use. But for now, let's keep it simple. Let's go at the money, or close to at the money. And so we'll be buying here. Let's continue to go short term. So we'll go ahead and place this order. Actually, before I do that, let's take a look at the risk profile. And just like we were looking at 2 weeks ago for the call, or the reverse of it last week with the put, if it doesn't move at all, we just have time decay, we lose. If it goes down, we lose faster, but the end result is the same. Most we can lose is the amount we're putting in. It's a debit trade. As it begins to go up, we would still have some negative time decay until we get quite deep in the money. All right, so there's our first one. I'll go ahead and place this trade. Just a few seconds later, we did indeed get filled at $1.65. Okay, next let's put together our calendar spread. Now here we're going to need a few more strike prices, because if our forecast is for it to go to 83, that's where we would like to be. So let me see how close this will get us. Well, not as close as I would like. Now, we would not need to go all the way up, so let me just start here. Now notice that even at 75, we're not bringing in a lot of credit on our sell, only 22 cents. So that's something to at least be cognizant of. And we're not putting out that much either, but in theory, we'd have 61 cents, and we'd be looking up here. This apex is where we would do our best. So with a big forecast like this, with a longer forecast, we might begin to swing back into favor on going with just the long call. Now, if we bump this up to 83, now we're not getting any credit at all. So it definitely would not be worth it to do that, even though that's where our forecast is. So let's go back to 75, and we'll go ahead and place this order. And I'll I'll be right back with you when that fills. Okay, we did indeed get filled on our calendar spread as well. This is the one we sold, we got 23 cents. This is the one we bought, we got 85, or paid out 85, I should say. So 62 cents is our net debit there. So less than half of our max loss, but a lot less than that on our max profit. If everything were to go perfect, which we would not let happen, but if everything did go perfect, we'd be in the neighborhood of $1.72. Well, that'd be great. That'd be more than a double. But we are never going to let that happen. If the stock shoots up, as we think it will, as we're hoping it will, we're probably going to close this one along the way. Whereas we would hold on to the long call a bit longer. Now, in a situation like this, where my forecast is for a really big potential move, I might lean more towards the individual call or put, as the case may be, in this situation. If I was less confident in the move, or I wasn't expecting as big a move, I would lean towards the calendar spread. So we'll see how it plays out. Let me just give you this quick visual here. Our reward to risk ratio, if we're right about this move, we make several times our money. Or we could maybe make a double if everything worked out perfectly, which it probably would not.